All right, so we're going to look at Covey portfolio performance. So somehow the portfolio is still alive. It's just we kind of went below zero, and we went to negative 0.09. So we got squeezed pretty hard. So technically, that account would have ran out of money, but or margin call, you have to add more money. But we're back up at point 0.3. I'm thinking if we get back to 1 or 1.5, we could add like a 1% in TLT or like the dollar UUP, and I think we'll be back in the competition, and we wouldn't have to change a whole lot of our portfolio until we reach the bottom. But the hardest part is that I mean, the hardest part was we have all our positions and we're waiting for it to renormalize, and the waiting percentage is still there. So we're waiting for it to kind of rip back up to where we can get back in the competition and then get on the leaderboard and come in for a sneak attack. Instead of winning January, we'll win February, and we'll see. But it's looking more likely that's coming. And then Ninja Portfolio Performance Summary. So as far as like, it was more of a change, an upgrade. So I had 3 live accounts. Now I have 4, and then I just have 4, uh, you know, evaluation accounts. And these evaluation accounts are pretty much ready to be converted. It's just I need some money to convert them, and it's cool if they sit on the on the account just because they're so cheap. It's like $36 per account per month, and with 4 of them, it's no big deal. And I'm not looking to add any more right now. I'm looking to convert as many of these as possible, get them going, get them building equity. Right now, we have 2 of them near 53 grand, and soon you can start with doing withdrawals. But the goal was to get as many accounts past the finish line before the dump and the pump, or so-called pump, for second leg inflation. But the quicker the more accounts, the quicker I could get through the door, the better. And right now, it's just getting converting more of them to live. And I might buy 2 of them. It'd be $60. I might buy 2 of them just to make it even 10. So then, by the time rolls around for coming to the bottom or going to the top, we'll have most of them converted, and then start making money, and so that we'll be able to take profit a lot quicker. And I'll kind of do an in-depth plan of just what I'm thinking later. But daily closing thoughts on the SP 500. So we came back to actually retest support. We didn't really touch it yet, so we're just trying to figure out what's going on. And I think we actually pulled back after all of that huge run we had on the, I guess, a huge squeeze, and we broke support here, and looking to come back to retest it and reject. And that's kind of it. Like we're breaking down, and it finally is coming true. I mean, after all that time of wanting to short it, all of January or all the end of January, it's finally, the middle of February, it's finally coming. And we look at the institutional bias, it's kind of like switched back to the middle. But if we get another rally in the stocks, it's going to just force the institutions to go short again. But for right now, we're looking to kind of flip back to maybe a more bullish stance. But yeah, like on the Dow, it's come off the red zone, so now we're looking to long if we get any kind of market structure break to the upside. The 4-hour market structure is still holding, so it makes sense to get in a few scalps of longs and before any kind of dump. But the institutions are still bearish for the most part, and it makes sense. I mean, risk to reward is to the downside. Oil's been kind of acting interesting. This is the one. So we haven't closed the week yet, and we've pretty much came into supply of daily supply, and we're trying to see if it holds. If I look here and go to the market structure in the 4-hour on West Texas oil crude, we have a 4-hour breaker that hasn't been retested. So my idea is that's going to come back and retest it. And we look here on the H12. We did have a market structure break on the 12-hour to the upside, but I think this is under false pretenses. Like, this is like a fake out. It's both on crude and West Texas oil crude. And then on Brent, it's got the same thing. There hasn't been really a retest here on the 4-hour market structure break. And it's going to want to pull it down to retest. So that's kind of just how I'm seeing that, and that fragility in oil. I think it peaked. It decided to break the 12-hour in anticipation for the CPI that's coming up. But the thing is that the CPI, we don't know what's going to happen, if it's going to be higher inflation or low inflation, low demand, and what's going to come of that. But I think that's kind of just what people are wondering. Like, is the inflation really gone? Is the CPI going to finally find some peace, and so on? But I honestly have no idea what's going to happen. But as far as on the weekly close, we still got one more day to see if we're going to close back above. We don't know if it's going to dump and how hard. With the VIX popping up, there's a huge chance that the West Texas oil can dump before the end of Friday. That's kind of just my piece. I mean, with this weekly close below support on the break on the retest, I think it's totally possible with the VIX popping up that this could just get squashed in anticipation for CPI. HYGH credit spreads, smart money, looking pretty bad. If the market goes up and this goes down, it's a huge tell. But it's not looking good on the weekly close. Not at all. Not one bit. Huge chop right there on the weekly, but deviation totally. There's a big war between the bulls and the bears right here, but it's not looking good for the bulls. And it's a little hard to figure out which one do you follow, HYG or the credit spread, HYGH. But HYG on the junk bonds, pretty much. If we get a weekly close down here, it's pretty much toast. But here, that daily close took out all the support right there. So it's not looking good for credit spreads. I would just take out the G or the H, the credit spreads. Look at the euro. Let's see how that's doing. Euro is staying alive, barely, as we see there on that daily close. It's trying to close below. I've been watching on the 12-hour market structure break. It's just like barely hanging on, and I'm waiting for it to finally break. And it might come today, on Friday of this week, and we're just kind of waiting until it breaks. And that's I'm playing both sides, and I'm waiting until I can start stacking to the short side. But it's slowly coming, so I see it. And then Japanese yen's been holding, and with how well it's been holding, it's something I don't want to bet against. And as long as this thing holds, I'm assuming volatility is coming, and it's got some big gaps to fill. If we were to switch this back to the market structure analysis, the weekly breakers and the 4-hour breaker, the Japanese yen has got an untested weekly breaker here. So this thing could break all the way up here, and that would cause a lot of havoc with stability and fragility. And here, it looks like we retested the weekly breaker here, and we're rejecting. We're kind of caught in between this volatile range here, and we had a 4-hour breaker here. So it would be nice to see it pop up into here, and then that would be that kind of expected move I'm looking for, which is a nice retest on that 8-hour trend line that broke, and then a rejection there. But I think that's kind of what the VIX sees. With this VIX, it broke out on this candle, 12-hour, retested here, and then resumption on this candle. And I think that's what this is seeing, is that we finally broke this trend line that's been keeping us in, and a nice retest rejection would be something to look forward to. And how everything's looking forward to it. The VIX is looking forward to it. The Japanese yen is looking forward to it. The euro possibly breaking down is looking forward to it. The copper that has broken down is looking forward to it. Lumber that's broken down, coming down for this retest on like the 12-hour is looking forward to it. And the dollar holding and just going sideways pretty much is looking forward to it. And that kind of strength. So it's just a long time coming, and soon we'll have a 12-hour market structure break, we'll have a 4-hour market structure break, and it'll be over. Right now I'm looking for some kind of bullish pump into here, or somewhere around here. It looks like this reset, so I need to update that. 41.42, I called out some areas, so now I could remove this, because this is wrong. It wasn't updated yet. And here, 41.37 is this weekly high level that we're looking at, 41.37, and then 41.40 is the 8-hour body close for resistance, 41.40, and then this one's saying for 41.42 there's a 58% chance of reversal. So that's kind of where I'm going to be shooting for, or we could shoot for a little higher. But for the most part, we're looking for a 15-minute market structure break up around these levels. This one's even higher chance of reversal at 41.61. But yeah, I'm looking for it to come up into here and a 15-minute market structure break up there for a reversal, and then short. So I'm going to long, and then I'm going to short, and then hopefully we start the next week. And then maybe it's on the rejection at the end of Friday. But looking forward towards the long side, just because it would be nice to get some of these accounts that are live, some balance in them, get them closer to accumulating some meat, I guess, or some capital. But yeah, that's kind of what I'm thinking. I'm thinking that we're overextended here. We definitely stopped out a lot of bulls, and time to retest, reject, and then break this 4-hour market structure, break the 12-hour market structure, and then be done with it, and then allow those these currencies to be free. Some things I want to look at is this market structure. So we looked at the euro. Is there any naked 4-hour market structure here? Yes, there is. There's one all the way down here at 990. So yeah, this thing's going to come down pretty hard. This is basically a magnet. So we'll go up here, pretty much the previous month high, and then come down to 990. So that's roughly a 4% drop in the euro, and that's significant. It's pretty bad. Uh, so that's kind of what we're expecting for the euro. And then Japanese yen, we're expecting probably the same amount on the upside. Roughly almost a 7% increase on the yen. So, man, some big moves expecting to see and fill. Like these are gaps pretty much, and they're going to get filled. Just a matter of when, and we just happen to be in the right kind of part of the season where fragility happens. It either happens in like the first 2-3 months, or it happens like in the later part of the year. But for the most part, we're ready if it were to happen within these first 3 months, like February or March. And we've just been kind of waiting patiently for this move so we can make a lot of money off of it. But that's pretty much what I see, and what I'm waiting for. Like I'm waiting to scale in with bigger or just more aggressive longs or runners in just bigger position size or more accounts. Right lately, I've been just running with very few accounts, like one or two, or one live, one or two evaluation accounts. But for the most part, like it's been working. I've passed 4 from the evaluation and turned them into live, and 2 of them are close to being able to withdraw money, and trying to get 10 passed as quick as possible. So we'll see how that goes. I'm just trying to develop a plan and just what's the best way to approach this with this coming event. Do I like save money to commit to converting accounts from evaluation to live, or do I use this deal that they got going on for making for filling the last 2? I got 8 accounts. Do I use it to fill 10? And that's kind of the question. I think with as time goes by, I think for the most part, the more I can decrease my liability, the better, and that's by converting evaluation accounts to live accounts, and the quicker the better, because then the leverage or the accumulation or the withdrawal pretty much doubles for each account that I pass or convert to a live account. So I think that's pretty much the main goal, is just focusing on the accounts I have, converting as many to live as fast as possible before any kind of big dump in the market or any big kind of pump that I'm expecting, and get them as close to live as possible, get them as close to above 2,500 as possible, so that I can begin withdrawing and compounding all these accounts. So that's kind of just and then I think I went over the Ninja Portfolio Performance Summary for the most part. The other kind of cool thing is that I'll just talk about the trade for today. We'll trade it. That's a text to marker. So the bummer was that I was short before it dumped. I just got home and I was super tired, and this was getting close to like 10:30 or 11. I just really didn't want to manage this, and I wanted to sleep. And at the same time, like I'm just like really afraid of this kind of going totally the other way, because it could have. It could have filled that weekly fair value gap, and I just would be powerless because I'll be asleep. And I didn't want the bot to be on, and I was like, you know what? If I get some positions in, I'll try to move it to break even, and then I'll go to sleep. And I pretty much laid my head down for like 15 minutes. Next thing I knew, this candle, or these candles that were just really volatile and like wide swinging, stopped it out. And I was like, whatever. Like, I didn't lose anything, but at the same time, I was on the right track to short this run. And this one was a good short from right here and closed right here. And then these guys stopped out pretty much break even right here. And so that was pretty much it for the day on just how that worked. But that was like a little bit of a lesson. One, I overdid my size, and because I overdid my size, I moved it to break even a little faster. And because I moved it to break even faster, it stopped me out. Like, if I would have just did the position sizing I normally do, I wouldn't have had a problem like that, and would be fearing the backlash. But because it's so volatile, it was something that I should have just taken into account and just allowed it to breathe, because that's kind of just how things work with this. It needs room to breathe because it's so volatile, and then like a really slow break even once it breaks away. And that's the way it could have worked out, but I was just impatient, and I moved it. I was scared because I had such a big size, and I wanted to take risk off the table. And because I did that, because it started with an abnormal position size, that's where it went wrong. But a little bit, of a thing to contemplate on, but still ended on a good note, which was converted one evaluation account to a live account. So, looking forward to monetizing the volatility that's coming, and wish you the best.